Have you ever wondered why the rich seem to get richer while everyone else struggles to keep up? It's easy to assume it's just luck, inheritance, or some secret cheat code that normal people don't have access to. But the truth is, the top 1% manage their money fundamentally differently than the other 99%. It's not just about how much money they make. It's about what they do with it once they have it. And the best part? You don't need millions in the bank to start using their strategies today. Welcome back. Today we are breaking down the specific financial habits of the ultra-wealthy and how you can apply them to your own life to build lasting financial freedom. The first major shift is that you must stop working for money and start making money work for you. Most people trade their time for money. You work an hour. You get paid for an hour. The problem is you run out of hours. The 1% focus on decoupling their time from their income. They prioritize passive income, money that comes in while they sleep, whether through dividends, real estate, or business automation. This leads us to the second point. Focus on net worth, not just income. Society is obsessed with salaries. We ask, how much do you make a year? But the wealthy ask, what is your net worth? High income does not equal wealth. If you make $1 million a year but spend $1 million in one, you are broke. The 1% track their assets versus their liabilities. They focus entirely on acquiring assets, things that put money in their pocket, and they avoid liabilities, things that take money out of their pocket. Next, you need to understand the concept of leverage. Average investors are terrified of debt. The 1% use debt as a tool. They distinguish between bad debt, like credit cards with high interest rates on consumer goods, and good debt. Good debt is used to buy assets that pay for themselves. For example, taking a loan to buy a rental property where the tenant's rent covers the mortgage and leaves you with a profit. That is using other people's money to grow your own wealth. Another crucial habit is tax efficiency. The average person pays their taxes first and spends what is left. The wealthy structure their finances to spend first and pay taxes on what is left. They use legal entities like corporations or LLCs to deduct expenses before they are taxed. Now, I am not a tax advisor, and you should always consult a professional, but the mindset here is key. Don't just look at what you earn, look at what you keep. Finally, the 1% play the long game. We live in a world of instant gratification. We want the nice car and the new phone now, but wealth is built through delayed gratification. The wealthy understand the power of compound interest. They are willing to live below their means today so they can live effectively without limits tomorrow. They don't panic when the market drops. They see it as a discount sale. They stay the course. Managing your money like the 1% isn't about buying a yacht or a private jet. It is about buying your time back. It is about discipline, financial education, and making your capital work harder than you do. Start simple. Track your net worth, automate your investments so you never see the money leave your account, and start building a second stream of income. Thanks for watching. If you found value in this, make sure to hit that like button and subscribe so you don't miss our next deep dive into financial freedom. See you in the next one.